Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 23rd of August, 2022. We're at episode number 2299. Today, we're going to party like it's 1999. No. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the way the market postured this morning through our convergent trading pre-market summary sheet here, we have basically a mixed posture. We see that the indices slightly off now, but really were unchanged just a few minutes ago. The S&P had dipped as far down as 4118. Currently trading at 41.35. It put in a high of 41.57, giving us exactly 39 points of range in the overnight session, and here it is tackling its mid for the session. So we're in between the high and low of the session so far. Right now, the NASDAQ looking pretty much the same. So there's a slight downturn here, except for the Russell holding against yesterday's settlement. The one highlight I want to make here is crude oil. Crude oil, just an outstanding performance yesterday. Crude managed to drop very aggressively. It had an open drive type opening yesterday down and pushed pretty deep, pushed all the way down into almost the $86, the 86 even. I think it went to 86.40 or something at the low, and then immediately reversed for a rally to close actually higher. I'll talk about crude in a little bit. There's an interesting setup there. Other than that, gold's sideways, still trading at the classic 1750. I mean, gold has done nothing but go from 1700 to about 1900, to back to 1700, back to 1900. You know, those gold bugs must be going out of their minds for the last 20 years now. This thing climbing and then just going completely sideways for decades. We see the treasuries are lower this morning, pushing yield higher. The grand performer here is U.S. dollar. I want to show you this chart of the U.S. dollar basket. Look at this baby go. Pandemic, big drop. Everybody sold everything across the board. Then it makes a peak right above 100 at 102. Then drops all the way down to 89, just taking a beating on all that money printing and so on through 2020, and then starts to rise. And as the cracks show up across China, the Eurozone, we see the dollar gaining more and more strength as the currency of confidence. And this morning, it basically tackled its high at 109. It got this morning. It got to 109.27. The prior high is 109.29. 4. So it pretty much it's got a bit of a double top here, and it's back to its high. The euro dipped below $1 versus the U.S. Again this morning. Again, this is this looks kind of this looks interesting, but what it says underneath is there's just trouble. When the U.S. dollar is being bought, given the size of our debt here in the United States, it says that there's more, there are bigger problems and less confidence with other sovereign economies. And so we just need to keep an eye on this. This is more of a macro type of look, but it's still relatively significant. This morning, again, mixed posture. Opening almost unchanged. Pre-market, we had JD.com with 39.95 billion in revenue for Q2, came in at 61 cents beat its earnings by 50%. We had Medtronic, which is a major med tech company, 7.37 billion, and it beat by just about 1%. Bank of Nova Scotia reporting on Q3. They have a calendar that's a little bit off of everybody else's. Macy's reported this morning, beat by 17%, which is somewhat surprising for a retailer, a large brick and mortar retailer. On 5.6 billion, they beat on revenue and earnings. We get Nordstrom after the close. We got Dick's Sporting Goods, a major sports retailer here in the U.S., beat by 3% on earnings. Advanced Auto Parts after the close, and then we get Toll Brothers after the close as well. So there's a small set of earnings, some pretty big. Overall, the U.S. dollar challenges recent highs, signaling flight to safety. There's still a lot of anxiousness and nervousness about the Fed and what it plans to do here. There's also a lot of nervousness across Europe as the inflation numbers are really high. There was an article yesterday that Great Britain may see as much as 18% once the higher fuel costs kick in at the end of the year. So what we've got in Europe is a bit of a what we've got in Europe is kind of a little bit of a ticking time bomb there, because the Eurozone is going to have to tackle inflation while energy prices are rising due to the Russia-Ukraine conflict, forcing their hand into a recession. So we'll see what Lagarde does there, but it's really a very, very tough position to be in. So the flash PMIs from Germany and France had some decent ones and not so decent ones depending on manufacturing or services. So there's a bit of a range in the Bund this morning, the German Bund, the German Treasury, the main Treasury. Great Britain PMI, big miss this morning. Manufacturing PMI flash this morning came in at 46 versus 51.3 expected. Last month had 52.1. That's a big miss there. And then looking forward, we're looking for the U.S. PMI, flash PMI numbers on manufacturing, services, composite. Consumer confidence out of the Eurozone expecting negative 28.6, not very confident. And then the headline number today that's remaining is the U.S. new home sales at 10 o'clock, and Fed's Kashkari speaks this evening. So that's what's on deck. Looking at the S&P, the S&P has traded 213,000 contracts, relatively heavy compared to prior days, a little bit higher than where we were yesterday. The inventory is relatively even. We basically traded almost as much above as below the settlement price, and the range is 39 points, giving us an idea of what we might expect in the overnight session, in the day session, from the amount of activity in the overnight. There's a carryover, there's a leakage in terms of volatility or activity in terms of range from the overnight session into the day session. The point of control shifted dramatically down to 41.47 compared to the prior session's overnight point of control, the low of 41.18. And what did we do overnight? We got the 41.20. 41.20 is done. 41.21. So that's where we are. Here's what I talked about yesterday. I talked about the potential, discussed at length the strong potential of a move away from this balance, and if we do, then this is the number we're looking at, and that's the 41.21, as mentioned many times. We hit that in the overnight session, so we're back in this balance here. This is from yesterday's Trader Bite, and this balance here. We're back in this. You know how once you once you're fully grown or whatever at 18, 19, 20, there's a certain weight you hit, and then you constantly shift away from that weight and keep coming back, and then shift, and then you go into a diet, you shift down, you go back to that weight, and then it just seems like this, the our bodies kind of tuned to a certain weight at various ages might creep up a little bit, but there's this balance in our weight, right? This is the 41.21 right now for the S&P. No matter what it does, it just keeps coming back to this weight. So whether it gorges on pizza or it eats rice cakes for 2 months, which are actually heavy in carbs, it ultimately returns to 41.21. 41.21 is the balanced weight or the ideal weight for the S&P right now, and that's where we are. This morning we're trading at 41.34, but that's what we hit in the overnight session. Here's how that looks. So this is the action from yesterday right here. It's loading and loading and loading. Let's look at the active chart. Here's the action. We close right in here yesterday. And we pop a little bit higher, and then we immediately drop right before the European Open. We immediately drop into 41.18. 41.21 is right in here. We drop to 41.18, and as soon as we drop to 41.18, we see an excess low being put in here, an immediate return to the mid and a push through to push to 41.57. So this rotation here is basically one immediate swing, and now we're swinging the other way. So what we have is activity from both buyers and sellers pushing as we test certain areas. We went back to yesterday's RTH mid and IB low, and came right off, and now we're trading around the mid of the session of 41.3750. The profile shows a bit of a P shape, and what's likely to come to fruition this morning, is a two-way battle as we are in the middle of major balance. Okay, so if I switch this to show extended, let that load. Let's go to Crude ES. Here's where things are. So as we load, there it is. We're now back completely in sync with the major balance in this zone. So we are right in here. So the neckline for this is around, what is it? I forget the number, 40.85 or 89. I think 40.89 from the bottom, and then from the top, the neckline is something like 41.70 or 41.75, if I recall. These are the two kind of necklines or boundaries that come from this area. Let's look at that. Yep, there it is, 41.75, right? And 40.73. Okay, so I was off there. 89 must be something else. So we are right dead center in here, and what that means is now there's likely to be two-way action, a two-way battle in this zone, as both sides are now seeing balance, and therefore the interaction is likely to happen from both sides. So here's the bigger picture. We are back into balance. We're back into balance in the S&P. We're back in this area down here at 41.21. And as I merge all of this stuff together, if I merged all of these profiles together, we end up with a fatter and fatter zone that we would trade in. 41.81 right down here, this lower prong. Remember what happened up here? There and there. This is what we've got down here. So as I merge more profiles, I end up with a profile that has two prongs and then tapers off as we approach 40.74, and we are smack dab in the middle of that. We are right here, 41.35.50. So what does that mean? As we come in, given yesterday's sell-off, there's going to be, because yesterday was a bit of an impulsive day, down from the prior session settlement, there's likely to be more liquidation on the open, but prices have moved far enough and are in balance, and therefore provides potential support where buyers who have been sitting around waiting for prices to pull back might want to step back in. Did I say 41.81? 41.18 as it's shown on the screen there. So what this does is it creates a wide chop range. So we got our rollover and sell-off that we talked about early last week, and the week before. Very anticipating that there would likely be a strong sell-off from the 4,300 to 4,350. We've moved down, and then guess what? We created these weak structures above, skipping. We have a small gap zone right here. Skipping these big areas creates an incentive for us to kind of fight our way down here and then start to move back up to rebalance. And at that point, I would merge this profile with this profile to see what we really have in between these two areas, to see what we've been trading. So that's what we have this morning. So as we come in, there may be, remember the 41.21 was taken out. 41.18 was traded in the overnight session right here. So last night, let me change colors. Yesterday, we had this kind of a profile. The point of control shifted to the 41.41. We closed at 41.41. We opened above, crossed it, went to 18, went to 57, and then consolidated at the 41.41 unchanged. And now we've come down to 41.35. We've tested 41.18, right? 41.18. We've taken out the 41.21. The 41.21, and now we have a decent sized gap as highlighted by this gray area right here. We have a decent sized gap below us, a double distribution profile, and the point of control in the overnight session is right in yesterday's low volume node. To me, what this spells is it's likely to try to push to the 21 again, and it's likely to bounce back up, and we're likely to see two-way action today. We're likely to have relatively wide chop shows. Just be prepared for that. Likely to see some more of a, it's likely to be wide enough to give us the ability to trade pullbacks from the inside out, but I would not lean on breakouts too much today. I would trade more of the outside in. Look for extremes. Define your extremes either through your price map or maybe an RSI or MACD or whatever you like to use, fibs, whatever, and then trade from the outside in is the way I'm seeing the market. That's my opinion of how the market is likely to yield some profit today. So rather than a continued trend, trading from one side, a single bias and leaning on zippers or whatever, like yesterday was a day of just leaning on zippers in the direction of the short side all day long, and that worked out pretty well. So that's the key thing I want to share today. There's a lot that's covered here. Hopefully it's relatively clear, but you can see that we are very much symmetrical here in our discovery. We took out the overnight high by just a bit, falling to the middle. We are likely to come up short on the retest of 41.18. Even if we take out the 41.18, the overnight session, I would not look for that to continue very much. I would expect it to break and then reverse back to the middle, and it's likely to balance out. In the overall. Thanks for the reminder. Crude, what a beauty. Crude yesterday just plowed right through some prices. Let's look. We're looking at the extended. Look at this crude chart. I mean, it opened yesterday and plow. It only ticked 2 ticks on the buy side before exploding to the downside. So yesterday, crude trading against VWAP all day, right? Until the reversal, really hugging VWAP on the pullbacks, just really an outstanding trade. But what it did on the daily is it opened at a price, went down, and then came back and then closed somewhere up here. So what it did is it generated a long excess. This is called an excess, okay? And it did so on a higher low versus the prior low. So crude has a buying excess, which created what I believe to be an intermediate term swing low. So my notes from last night, CL had an impressive buying excess today. It pushed back to the 200. So the 200-day SMA was down here. It pushed down to the 200 SMA plus an MC point of control at the low, and immediately rejected these prices for a return to almost the prior week settle. And this was done on heavy volume. I said today for CL might be marking an intermediate term low for a swing higher, expected to take out 91.69, which it did. 91.69 was up here somewhere, not somewhere up here. That's that high, right? Expected to take out 91.69 and to start attacking 94.63. We come in this morning and boom, it took off right off the open. It consolidated, took off, and it is very bullish. It continues to push higher. So this was a very clear market structure on crude. If you look at the profile on this, it's really, you see an excess and then you see a neutral extreme buying close. This is a neutral extreme up day, and with a very heavy excess low, which makes it a reversal low, which means that it's likely to continue in this direction. Very clear structure. Yes, I know there was news from Saudi Arabia and stuff, but isn't it amazing how it coincided with the test of the 200 moving average, the 200-day simple moving average, all sessions or day session, it's about the same price. Pretty big reversal. I'll let you go. I'm way over my time. Good luck today. Again, it's not likely to trend today. Keep your mind open to whatever comes, but it's not likely to trend today, in my opinion. And don't forget to hit the subscribe and like buttons on your way out. Appreciate your help. Thanks.